Good morning, folks, and welcome back to Almus Market Mornings. Carrying on the sentiments from yesterday, on another day of lack of fighting, oil prices saw some cool off, which were also helped by a statement from President Trump, who said US and Iran were engaged in diplomatic talks to end the Middle East conflict. It's not actually clear whether any substantial negotiation is taking place, but at least markets seem to think so. On the other hand, tech sector is once again in a turmoil. It feels like there is a weekly realization that happens where some suddenly, for some, the valuations and the heavy investments do not seem justified. Good morning, JK. A bit of a respite from geopolitical updates. What's your sense? Is this something temporary building up, or you think this significant ceasefire might be incoming?
Good morning, Swaraj. Yes, Trump did say that US was in negotiation with Iran, but we have heard this many times before, haven't we? Skepticism definitely rules about the eventual outcome, and hence, that's also showing up in limited reaction in the markets. Uh, I think the uh, selling into the bonds later in the day after the initial buying, or rather yields going up once again later in the day, indicate that market still has a skepticism, and treating this latest pause in hostilities as another iteration of what critics might label as a, like a taco Trump is floating around that ahead of FOMC is to be down, so that the FOMC could be looking at lower inflation and may remain unchanged. Uh, the market is not taking it, in a very extremely positive way, except the oil prices came down, but you haven't had any major rally in the stock market, nor even the yields sustained lower levels. So that's what it is. I think market would like to see something more concrete. Also, there was some uneasiness as there is a report which says Iran is accusing Ukraine attacked a Iranian commercial vessel, and that's a risk, that market will be deeply probing into, because so far it has been a regional conflict. But if any such truth is there, that it can widen it. It can go into a wider war. So that's not priced in by the market. So the risks are higher still. Just going by the Trump statement, market is not doing any more of rallying and then backtracking. So that is my view on whatever happened. And as far as the markets are concerned, the stock markets were actually subdued because they are expecting major companies like Microsoft, Amazon, Meta, and Apple to report quarterly results this week. Uh, what people are looking at is whether the optimism carried so far is misplaced. In fact, last week, market was spooked by the quarterly results from Tesla and Google that showed heavy spending in artificial intelligence. And earlier, the perception was that heavy spending was positive. Now, the anxiety is whether the companies can give returns commensurate with a higher investment or spending. So that's why the markets are not reacting much. In fact, today, Japan and Korea are down about 4 and 7% respectively, although we did not have a major fall in the Nasdaq. This follows the semiconductor index in, the Philadelphia Semiconductor Index also falling further, and it's clearly into bearish territory now. Uh, the thing is, these right now the broad-based selling is not there because there are some markets which are still okay. I think if you are seeing a start of a larger sell-off in the markets in equity, where it will start is the markets which have gone up substantially. So if you look at it, last 15 months, Japan has gained 100%. Korea had gained 250%. And even now, even after this correction, Korea is still about 130% higher from where it was, in April 25. So that's where the market stands. I think excesses are being unwound. Whether eventually this leads to a broader sell-off is something that we need to wait and see. I think that depends on various factors: geopolitics, oil, interest rates, and of course the indications from the IT companies themselves as to their outlook for future earnings. And we have seen some sort of a diversification from these markets into neglected markets like Indonesia and India, even Hong Kong. Again, how far that continues depends upon whether the market gets into a broader sell-off, or it's just a matter of correction in those markets and other markets picking up. So it's a wait and see. As far as the dollar is concerned, it seems to be gaining some traction ahead of Fed meeting. Although this meeting is not going to change the rates, there is some sort of a caution. In fact, I would say some minority of market people are expecting even a surprise hike as well, suggesting a surprise hike. So market might be preparing, because overall, as we have been saying, while CPI and PPI came down last month, they are still much higher than Fed's target, and inflation has been above Fed's target of 2% for now nearly 5 years. So suddenly, if Fed does do something different, that's what the market is trying to be cautious about. So that's where we are seeing the dollar still higher, and particularly against the major currencies. But beside all this, still there is a lot of action in the rupee suddenly, because as we reported yesterday, it was surprise intervention on Friday ahead of the market open. And though rupee had already gained, opening with a gap down yesterday, um, taking cues from lower oil prices, suddenly at 96.15, RBI was seen selling dollars. Volume was reported to be in the region of 1.5 to $2 billion, and it pushed the dollar as low as 95.60, although that was momentarily seen. And fall through 96 also triggered stop loss selling. And uh, of course, uh, one should also note that at the dip, there was once again good bidding for dollars that was seen. Now the question is whether central bank is changing the sentiment with these actions, and my view is it's not. And these can result in short-term corrections, which the market will happily latch onto. What we need is a sustainable fall in the oil price, a sustainable peace process in the Middle East, and flows also to increase substantially. And there are times when RBI actually preempts flows and sells dollars. So we need to wait and see if that is the case now. If not, and if we don't see any major flows today, tomorrow, I won't rule out another test of 96.50. Of course, that said, we are hearing FCNR flows actually steadily increasing. As per yesterday, reported that RBI governor also mentioned about FCNR flows touching 32 billion, which is quite a good amount. Now, considering that RBI also does not like a rapid appreciation of the rupee through intervention, I believe they would be content to see it stabilize in a lower range, which I think now would be between 95.60, 95.50 and 96.50. So alongside, of course, the spot dollar market, they also intervened in the forwards yesterday. So the premiums on 1 year have dropped down well below 3% now. So quite a bit of move in the rupee, even as the broader dollar remains somewhat range bound. Uh, I think all waiting for this week's central bank meetings, particularly the FOMC, which is the first meeting to happen tomorrow. Yes, I think an eye on the geopolitics, oil, as well as FOMC. Thank you.
Thank you, Rick. And yes, I think generally participants are waiting for the FOMC tomorrow. Some minority of market participants suggesting that a rate hike is also on the cards. So there is a environment of caution all around, and when it comes to the risk assets, especially stocks, in some pockets there is a good amount of selling. And importantly, it seems that some diversification plays underway. AI heavy markets are seen getting sold and flows getting into Indonesia, India, and other non-AI markets. So that's an interesting trend that's emerging. Apart from that, geopolitics is of course ongoing. We don't know what President Trump has said, that negotiations is going on. Such kind of statements from experience cannot be trusted, because a few fighting here and there, and we'll be again back in the same environment we were last week. So we'll keep an eye out on all these narratives. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.